Hi everyone, coming up I speak with the CEO of Flight Centre. A warning from the ACCC about credit card surcharges and how the trade war is impacting Australian company earnings. All of that and more next. Hi everyone, it is your daily 10-minute business and finance news wrap for this Monday, the 28th of April 2025. The Australian share market rose today by 0.4% on the S&P ASX 200. We'll have the details with Luke McMillan from Ophir Asset Management soon. But we'll start off with Flight Centre because travellers are being told to prepare for cheaper economy airfares to the US as travel demand to the country falls, just as US airlines increase their services to and from Australia. It comes as Flight Centre downgraded its full-year profit guidance, saying recent US developments have exacerbating a number of measures, including cost cuts, while also launching a $200 million on-market share buyback. For more on all of that, I spoke with its CEO, Graham Turner. Graham, firstly, to what extent have the recent changes to US trade policies impacted your business?
Ricardo, it's been significant. It's the unsettling times that's caused by what Trump and the other officials have been doing in America, in the US, has definitely had an impact on a whole range of things. Saying that, there's still quite a few issues that are within our control that we need to work on as well. So we can't just blame that, but it's a significant part of the problem we've got generally in international travel.
Can you tell me in what way the trade issues are impacting the business?
Look, the main thing is there's a whole range of things, but in our leisure business, less people are travelling to America, out of Australia and out of UK, Europe. It depends on the timing and that. Certainly the March quarter was down about 10 to 15% in both markets, but we think it'll be worse in April, May. And then you've got the corporate, which, half our business, a little more than half our business is corporate travel. It's significantly down out of UK, Europe. It's obviously going to be down a lot out of China, but our China business is mainly domestic, luckily from that point of view. And obviously other parts of the world, there is some down trading, partly due to the fact that less business people are traveling to America. That's probably a relatively minor part, but just the general feeling in business that things aren't great at the moment. So they're cutting back on travel generally to cut back on expenditure.
Made an interesting point. I saw a report from S&P Global a couple of weeks ago that said there were signs airlines were cutting airfares to the US, for example, as a result. Are you seeing this, or are you expecting to see this, or is it more of a case of airlines, I guess, maybe cutting capacity instead?
Look, it'll be a combination of both. There's no doubt the American carriers in particular, they've just increased their capacity into Australia, for example. Will have to and are starting to cut prices. They've also got, coming out of China, there'll almost certainly be a lot less capacity, particularly for the American carriers, but also the Chinese, out of China to the States. And this means there'll be more capacity going to other routes, and more capacity generally means cheaper prices. The one area that does seem to be holding up, but is the premium and business class seats and fares. They still seem to be holding, but certainly economy, where you're looking for tourists and that, they are already coming off, and they'll come off significantly more, we think.
And just finally, we jumped around a bit. Given the trade issues and as you mentioned in your first answer, there are some things in your control that you can help out with the business at the moment. Can you tell me about your plans to address volatility, and will that mean job cuts?
Look, we're already in a sort of a hiring freeze to a certain extent. Our frontline staff, we're still short in certain areas, so we'll be employing, and by frontline I mean salespeople and people who fulfill travel itineraries and that. but generally we'll be trying to cut back on our support areas if we can in certain areas. But generally not a huge. We're still coming back from COVID. We will still need more people in certain areas, Ricardo.
And one more thing, and just wrapping up, what's your message to consumers looking to travel if they see this? And as you mentioned, we are seeing that increase in capacity from those US airlines into Australia. If they're looking to travel, should they be expecting better deals to the US in particular?
Particularly to the US, yes. And my one piece of advice is make sure you have your documents, your passports, your visa, your ESTA in the right condition, because there are rumours around, and some of them are true, that the border passport, border controls are being very particular in the States in particular. So, but they should be expecting some really good deals over the next few months, even in peak season.
With Graham Turner there, the CEO of Flight Centre.
Now, Market Day on the SBS On The Money podcast.
3 days of gains for the Australian share market. The S&P ASX 200 up 0.4% to 7,997. With the details, I spoke with Luke McMillan, head of research at Ophir Asset Management. Luke, so a very good day on the ASX today. Why?
Yeah, following the US's lead, the Aussie market was obviously shut for Anzac Day. The US market on Thursday put on 2%, and then on Friday put on 0.7%. So I think a bit of a catch-up was overdue for the Aussie market for the first day of trading this week.
At the time of recording, the market's still waiting for some more stimulus measures to be announced out of China. How crucial is it given the ongoing trade dispute?
Yeah, it's very important for Australia. It's the most important flow-on impact from what's been going on in the US in terms of Trump's tariff and trade news. And that's simply because while they're not that big a deal in terms of a direct area for exports for us, the US only represents 4% of our exports. China's clearly our largest trading partner, and they're also right smack bang in the center of obviously this trade war with the US. And so they could be hit hardest, and that would no doubt have a flow-on effect to us.
As an investor, to what extent are you, though, worried about the impact of the dispute and the subsequent slowdown in global growth and the impact on local listed companies? Because we heard from Flight Centre today downgrading its full-year guidance. Bramble also lowered its revenue forecasts and also connected it to this story of slower global growth and the issues emanating out of US tariffs.
Yeah, I think it's a good point that we're not completely immune to what's going on with Trump's tariffs and this trade war. Flight Centre, particularly a great example, I think, they had a pretty meaningful downgrade in terms of their profit outlook for FY25, around about an 18% downgrade. Market has been expecting them to, face some headwinds. I think their share price is down about 45% from its highs back in September last year. But no doubt they're calling out the impact that it's having, particularly from about March onwards so far this year, not only on the leisure side of their business, but the corporate side of their business as well.
And finally, what are you telling your clients right now, given the ongoing volatility, and are there any opportunities for investors?
Well, like we sort of always say, it is time in the market over trying to time the market. There is a heightened level of probability of a recession in the US. I mean, if you look at things like Polymarket, it's putting a US recession at about 55% probability this year. There are certain areas of the market, like the small caps that we invest in here at Ophir. If we look at the US, they're down about 21% from their highs so far this year. They typically fall about 35% in a recession. And so they're already partially reflecting this probability that a slowdown may happen. And so I don't think it's really time to buy the dip. And, we've had this rebound over the last week or so. I'd still be a little bit cautious because I do think we are still yet to see what this level of trade uncertainty is going to have in terms of the underlying results of companies. Is it going to be a minor air pocket, if you want to use, airline terminology for Flight Centre, or is it going to be something, a little bit more elongated? And I think that's what markets are looking out for at the moment. So I would say just be cautious at the moment. Probably don't go big in terms of buying the dip. stay looking for companies that have got a high level of quality and a high level of earnings certainty at the moment.
It's Luke McMillan there from Ophir Asset Management. And we'll end on a quick warning from the ACCC, which is reminding businesses to review their card surcharges and pricing information after consistently receiving concerns from consumers about the practice. For more, I spoke with the ACCC's Deputy Chair, Mick Keogh.
Certainly the ACCC receives a lot of concerns from consumers about excessive or claims of excessive surcharges on card transactions. And we've identified that, particularly in this cost of living environment, as a priority in the coming 12 months. So we're just reminding businesses about their obligations under the law.
So are you actually getting more complaints from consumers about it at the moment?
It's been a regular source of complaints for consumers, a steady source of complaints, and we're making it a priority this year, particularly given the cost of living environment that we're in at the moment.
So run us through, what are the rules businesses need to abide by when it comes to surcharges?
Basically, their surcharge should reflect the cost that their provider charges them for the payment service. So whatever they're charged by the likes of Visa or whoever provides that payment service to them is what they are able to charge their customers. And they need to be able to validate that if they are challenged on it.
And from my understanding too, it needs to be visible so a consumer can see it, correct? Is that usually at the point of sale?
Yes, correct. Normally the rules are that businesses should operate under what's called a single pricing model. In other words, the price they display should be the full price. The surcharges are a little bit more complicated, but they should at least make sure consumers know that they are subject to a surcharge if they process a payment by card.
From my understanding too, the RBA sets out what is, I guess, acceptable for a business to apply in terms of surcharges, right? But how can consumers make sure that they're not overpaying?
It's a little bit tricky because a consumer won't necessarily have visibility on the actual cost that a business might be encountering. But we do know that, broadly speaking, surcharges in excess of about 1.5% or 2% will start to get to a point where you would raise questions about them. So consumers should anticipate any more than that. They may well be subject to excessive surcharging.
And finally, the RBA is reviewing these surcharges. How is the ACCC involved?
We've certainly made submissions to that review. The RBA is yet to release the findings of that review, but it's certainly very timely because there is a whole range of different issues that are surrounding the whole payment system in Australia, and it's important to get everything lined up. So it'll be interesting to see where that all comes out.
And finally, have you had to slap the wrists of any businesses, I guess, because of what you've discovered to be excessive surcharges?
We haven't in this current campaign, but businesses should be aware that fines of up to $2 million or $500,000 for individual apply to breaches of this particular requirement. So they need to be aware of that.
That's Mick Keogh there, the Deputy Chair of the ACCC.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.